Good morning. Good morning, everybody. Welcome. This is the 5th January here today, and we are back at another New York session over here. And we're going to start to see what we can get on over here. We got people coming in from all across the world. We have the YouTube Gulag coming in. We got the people in Zoom coming in. Amazing. So welcome you all. Hope everyone's doing well. Everyone's in the best of their health. And looking at pound yen, this is the level we had drawn yesterday during the Asian session breakdown we sent around 139.500. And price came right down to that level and rejected it because, we had support here to the left hand side here as well. Now, looks like we might be doing a retest here for price to continue down to retest this low, which is like a 26 pip range. So this could be a very, very good opportunity for price to continue down. So we'll have to wait and see how this candle closes. We still got about 27 minutes left. I think on the smaller time frames, on 30-minute time frames, we would need a candle to maybe close bearish below this previous candle and anticipate on the 1-hour time frame for candles to continue down to retest this low. So we'll have to wait to see what happens here. So 30-minute is going to be a smoking gun here, so we'll see what happens. But if the candle closes above 139.800, then obviously we know that there's going to be like price is going to go back in the range. So at that point it's going to get very difficult to see where price is going to go. So we'll have to wait over here on the 1-hour time frame to see what happens here. The gulag is piling up. Beautiful. All right, let's take a look at your JPY here. Your JPY is still ranging over here on the 1-hour time frame. Pretty easy analysis on your JPY here as well. Basically what we can see is that there's this consolidation happening right here. We got a support over here, we got a resistance up over here as well, so a little bit of a consolidation happening, and then above this resistance we have some clean ranges, and then below the support we have another support. So it's going to be much better for price to break this support. So we're going to remove this area here and we're just going to concentrate on this support right over here. Would that be a good trade to take an impulse sell at the break of the 30-minute? That is what I'm looking at. On pound yen, I would say yes. The reason why is because if you look at the previous 30-minute candle, right? This candle made a low at 139.733, right? So if a candle breaks the low over here, that also means that we're breaking the low on the 1-hour candle, which would make it a higher probability for price to continue moving bearish. Why we are not taking impulse entry on 15-minute for price to go down on GJ? Because it makes much better sense to take it on the 30-minute, because on the 15-minute we have a lot of consolidation happening and we don't want to get stuck in consolidation. So that's why we want a higher time frame confirmation. Let's take a look at gold here. Let's take a look at gold. See what gold's up to here. Oh, gold is moving bullish over here. Okay, we're moving up towards 1952, 1948. These are the levels we plotted out yesterday. Looking at the 30-minute time frame, we did break above resistance there. Yeah, I think gold should continue moving bullish in 1952. We got that coming in because, if you look at it this way, I think before, this might be a borderline conspiracy theory, but like before they make the vaccines permanent, for everybody, I think there's going to be massive lockdowns coming in, and because of those lockdowns we're going to see gold move up too. So that makes sense from a fundamental perspective, but technically it also makes sense for it to continue up towards 1952. Let's take a look at our first chart here for the day. This is by Yi, Mr. Yi. Pound yen. I missed my partial TP by 1 pip and managed my risk, closed my trade and lost around 1.10 of my initial position. Oh, very good. Very good. I think now when we look to the left hand side, we can see how there was this consolidation happening. So I guess this is what price rejected here. Price came up and kind of rejected there. But your idea was correct. Like if there was volume, the volume would have pushed price through this consolidation area to the left. But it is what it is, right? We can only react to how price presents itself to us. So right now we're at this situation and we're going to see what happens. All right. Let's see what's happening here. We got a chart coming in by Wendy. This is pound yen 1 hour time frame. So you got a buy opportunity above 140, let's say 100, which makes very good sense because we have clean traffic here to the left hand side. Good buys above Asian pre-London range, looking at a possible sell. Yep, looks good. No trade ranges within this consolidation. Awesome. We're only looking for price to kind of like move away from this consolidation. So this is what we got right over here. So let me just redefine my zones over here. I think this is what I'd be looking at right here. Yeah, for price to break above this resistance, 140, 100. We have clean traffic to the left hand side. At the same time here, if we get some sort of a rejection, there's a high probability for price to continue down. You know, but if price comes over here, then there's a lot of consolidation here to the left hand side. Even though if you measure this range, it's like a 27, 28 pip range, but you know, there's a lot of consolidation there, so wouldn't really make sense. I think what would make sense is easy trade is going to be about 140, 100. Really easy trade. Do you think that volume should kick in more after the second week of the year? Because it seems like there isn't much. You know what? On a smaller time frame perspective, like 30-minute time frame, 1 hour time frame, there is still volume. But if you look at it from a higher time frame, like the daily, the weekly, you might feel like the candles are smaller. But I think the volume is still there based on smaller time frames. You know, like when we get London pushes, New York pushes. Could you please tell me how can I improve on this trade? Okay, let's take a look here. Let's take a look at this trade. This is coming straight from the gulag. Let's take a look at this chart over here. This is pound USD 30-minute chart. Closed 80% at 10 pips, stops at break even. You anticipate price to continue moving because you had clean traffic to the left hand side. And yeah, I think it was a beautiful trade. It was a well executed trade. Your idea was there. You had clean traffic. Your whole plan was price to move up, but you secured positions and that basically kept you in the game. So that's pretty good. Very good trade management there.
Nice.
Alright, let's take a look over here. What's this? GJ 30-minute? No trade range. Buys above 140, 030. Okay. I would also say maybe buys above this area here. Because if price starts breaking above this recent resistance, it runs into another resistance here and then it runs into another rejection right over here. And after this rejection, we have clean moves going up. So personally, that's what I'd be looking for. Let me place this here. Ideal buys above 140, let's say 090, 085, let's say 085. Yeah, there we go, right there. How do you manage to keep your losses so small when you use so big lots? That's explained in the risk management section of the database. Risk management 2.0, risk management 3.0. The entire thing, the whole process. It's a very, very lengthy subject, and that's explained in a lot of detail. So yeah, we're slowly moving into the last quarter of this 1 hour. Looking at your JPY, we're still ranging here. Gold slowly, we'll see how this candle closes on a 30-minute time frame. 30-minute candle is forming now. We still got 19 minutes left. I think once we start breaking the low over here, there could be an opportunity for the 1 hour candle to continue down. It's going to be like a 20 pip range over here.
Hey coach, quick one.
Hey.
Just from what I've seen, if you drop into the 15-minute time frame, you see how we've come to a resistance now. What I've seen happen before is, so we've got the second bearish candle formulating. But what I've also seen happen is a bullish candle will come and it will break the high and it will continue the bullish movement. So right now, if you go into the 30-minute, it looks as if we're closing bearish, but we haven't closed it. So when the second half of the 30-minute candle, when it comes in, sometimes what it does is it will just break the high of this 15-minute will close bearish. And the one that just opens will break the high of the bearish 15-minute and it will continue the bullish movement.
Yeah.
and then this could be a tricky setup sometimes for people that don't wait for the candle to close. You know what I mean?
Yes.
So I've
Yeah.
seen that happen a lot on the second half of the 30 minute. The 15 minute will just come in, continue the movement, and break the resistance.
Yeah. Yeah. That's why we have to see this break on the 30-minute.
Exactly.
Yes, sir.
For anyone before, if they wanna, I think someone said they were saying, why don't we enter on the 15-minute break or something? So yeah.
Yeah. Yeah, I know that's good. That's good information. That's good information. That's why we're waiting here to see if you're going to break this or not. Because looking at the 15 minute seems like it did a fake out, like it broke up, but then it rejected based off a rejection here. It came down, closed back in the range. So this candle's still open, hasn't closed yet. So that's why we want to see this 30-minute break the low over here to give us that confirmation that, okay, now there's a high confirmation for price to continue down.
Yeah, exactly.
Yeah, it's like a nice range too. 20 pip range.
Yeah, this morning we had the same thing in New York Open yesterday. We had the same movement this morning in London as well. Literally the same setup. But yeah,
730.
let's watch and see.
Yes, sir. What's this? Sells below 139.540, buys above 140.150. Okay, so you're looking for sales below 139.540. That's still pretty good. You know, you're being very cautious about these sells, so that's good. I mean, if we break below 139.540, then we can look to see where we can move into, right? Looking to the left-hand side, I think the first area is going to be 139.320, which I see here because I see this candle which kind of formed here, so that's going to be the first idea, and then all the way down we're moving till 139 even, you know. And also with the lockdowns happening, I think that should push price bearish. Hey Mac, can you mute your mic if when you're breathing?
Please, man.
My bad.
Yeah, thank you. Man's breathing in the mics, man.
Like Darth Vader, mate.
Exactly.
He's the Darth Vader of the Asian session now.
Mac Vader.
How's everyone doing? Good morning.
Morning, Mac.
Morning.
Very good, very good. All right, let's take a look at this chart over here. This is gold. Gold price broke resistance. Take profit with wick fill over here with this move up on the 15-minute time frame. Beautiful. 1947. Are we still at 1947? Oh, 1948. We're continuing to move up over here on the gold. Asian session now. Yeah.
Mac Vader.
Oh. Ooh. See that? It didn't break below, so it's no sells over there. See, that's why even though price is at a rejection area or like at a retest area, it's still extremely important to wait for candle to close in your direction. For you to say that, okay, like, you know what, now it can move down. But as we can see over here, as this candle is coming to a close, it's still not forming the way you want it to form. I mean, you have this 15-minute candle close, it's closed with a small bullish body. And I mean, this doesn't really tell us that price is going to go up or down, you know, so we have to wait for the 30-minute candle to close at this point. 30-minute candle to close bearish or break the low, and then we can decide what's going to happen. But at this point, it's difficult. Let's take a look at, gold is continuing till 1951 and 52. Let's take a look at, what's that pair? GU. Let's see what's happening on GU over here. So pound USD. Let's do some fresh analysis, remove everything. Let's take a look at the 4-hour time frame. Let's take a look at the daily time frame. Daily is rejecting. It's creating a support. Probably it's coming up to retest the high over here. So let's take a look on the 4-hour. Looking at the 4-hour, we're basically creating a support down at 135,620. But I think there's also support form right over here, 135,700 as well. So let's take a look at that. Right, awesome. So we got the 1-hour time frame, we got a support form down over here, and we're coming up to a resistance area right at this level where we got rejected here before. So I guess if we can break above this area, then we can see that, okay, we got clean traffic through left hand side, and we can look at ideas for price to continue up towards, like, you know, 1.36 450, which is around 40 pips away. Pretty big range, pretty decent range actually. Or at the same time, if we start rejecting over here and we start seeing some candles coming bearish, I think we could see price retesting the low over here, which is also 40 pip range. But honestly, I'm going to be focused on pound yen to see if we get that move here or not. So let's see what happens here when this candle closes. Thank you for saving me money. I opened a short position and immediately closed it upon your advice. Oh, nice. Saving guys money first thing in the morning. Not making money, saving money. Alright. Let's take a look at this over here. This is GJ 30-minute chart. Wait. What? This is not the correct chart, is it? No, it's not. It's something different. Yeah, I don't know what's going on over here. What do you think about this? I mean, this is in the past, right? Wait for break, depend on time. Okay, yeah, we can wait for a break. But, yeah, this is in the past. But we still didn't break the support though here. Down here. We still didn't break the support if that's what it's looking at. And then overall, we need to break above this area to continue up. Yeah. Ooh, look at that. We're coming back down. See this 15-minute? Looks like it's going to fill the wick over here on the 15-minute time frame. And if we break the low over here, man, I think there's a very high probability we're going to continue moving down. Let's consult our Chinese indicator over here. Let's see what the Chinese indicator is saying today. The Chinese indicator is saying that pound is strong and the yen is also strong.
Oh man, I'm gonna be ranging.
Gonna be ranging.
Bad combination.
Yeah, let's see who's correct. Are we correct, the technical readers, or is the Chinese indicator correct? We're gonna find
It's
out today.
2021. I'm still using that. They still haven't updated it in 4 years.
Yeah. Which pairs provide the most range for pips? Every time I look at USD/JPY and EUR/JPY, they have setups but no range. Yes, so USD/JPY, I think the dynamics of USD/JPY have changed. It used to have a lot of volume when we started in 2016, 2017, and then for some reason the volume just died. I mean, now if you look at it, there's not enough volume at all. I mean, if we look at USD/JPY right now, you can see how far the support is on the 1 hour time frame. But if you measure it, it's like 7 pips away, So that's why I moved to a more volume-based pair, like, pound yen, euro yen sometimes. What about the candles to the left? Yeah, see now, there are these rejection candles here to the left, and we could say that this could be a risky maneuver for price to continue down. But I've seen this in the past, right? Where we have consolidation candles here to the left, but the volume in pre-New York, like we can anticipate the volume in pre-New York to drive price down once we break below, let's say 139.730. Right, and that could be on the 1 hour time frame. You can say that, okay, yeah, you know what, we had clean candle moving up, so maybe we're gonna have a clean candle moving down. So that's going to be a pretty good idea. So we're going to see what happens. I mean, even though if we break below the low over here, a paper trade. So this week I'm only taking paper trades, right? Stop is going to be around like 13, 12 pips. Anticipated take profit like 20 pips, but we have to wait for it to break the low over here.
Mr. Roger, quick question.
Hey, Anthony.
So on the 15-minute, I have a support drawn at 139.688. If the 15-minute candle were to close below that level of support, would sales be valid?
No, you can't take that trade because your range is going to be too small.
Gotcha. Thank you.
Yeah, no problem. Because, I mean, if you have a range, it's like a 30 pip range. And if you're drawing a zone in that range, then basically you can't take a trade. Because now you're dividing that range into two smaller ranges. So it becomes a little bit of a problem at that point. Yeah.
Gotcha. Thank you.
Yeah, man, no worries. Let's take a look at this chart over here. This is no trade, sells below 139,790. Same idea I'm looking at over here. And this is perfect, you know, no trade range. This is what people need to identify when you're trading. No trade range over here. Just this little thing over here once it breaks below and should continue down. 139, I think 139,550 would be a good target.
Yeah.
Yep. What's making you take this paper trade on GJ? And we just discussed this idea like 4 or 5 times. Literally, we discussed this 4 times for price breaking the low, man. I mean, yeah, I mean, we discussed this a lot. All right. It's coming down. Once we break the low, we can anticipate the 1 hour candles to continue driving it down. So we'll see what happens. We still got about 7 minutes left for this candle to close. But the most important thing is going to be now, see now on USD, JPY, we don't have enough range for price to continue down, so can't take that trade. On GU, it's still kind of messy. Looking at Euro JPY, we're ranging at this point. Looking at pound yen, we have an opportunity for price to continue down with volume, but we really have to wait for that. But even though if this trade is taken, we need to identify how you're going to manage risk, right? So let's say that's taken over here. Once we break the low and stop is around 13-14 pips, then you're expecting the next 15-minute candle to respect the high of this previous 15-minute candle to continue driving down. And you're anticipating the volume in pre-New York to continue driving price down, basically. On TradingView, it hasn't broken the low, but on MT4, it has. This are situations that break my mind. Yeah, so you guys just got to follow one thing. I follow TradingView candles, and that's it. If I see something happening here, I'm automatically executing on my MetaTrader. You know, I'm not going to try to match what's happening on MetaTrader and what's happening on TradingView. No, I'm just going to focus on one thing, and I'm just going to focus on that, because you have to realize that there are different liquidity providers, right? And different liquidities, they have different movements of price. So if something's moving differently on TradingView, it's not important it's going to move the same way on, let's say, MetaTrader. So like, you know, if someone thinks this is risky because this and that, then it's okay to just sit out, you know, because that's how you're going to learn about situations, learn about opportunities. Because if this was me, let's say last year, I would have said, oh no, like, you know what, there's consolidation over here, price may have issues moving down. But since I've seen this happen 6-7 times, now I'm getting a little bit confident that, hey, listen, I've seen this happen. So based on what I've seen, there's a probability for price to continue moving it once it breaks the low, you know, and that's how you get confidence slowly in setups and, you know, like situations. All right, we got like 4 minutes left over here. Price is slowly coming down, and let's see what happens here. Should continue down, break the low, and continue moving bearish. Let's take a look at this chart over here. This is impulse entry and stops kept under the current candle. Price didn't reach 10 pip target. You closed that BE. Okay, very good, very good. Still good. You managed the trade. You didn't go in a drawdown. Perfect. Let's take a look at this chart over here. No trade in this range. Wait for bearish candles to form at resistance. If price breaks up, very nice. Very nice. We're looking for buys and we're looking for sells. Both situations are here. What do you mean by respect the high? Does it need to reach the top of the previous candle, or it has? Basically, if this 30-minute candle closes bearish, you know, or let's say on the 15-minute, right? The next 15-minute candle would need to respect the high, which means like if it's going to continue moving down, right? If we think price is going to move down, we need to understand how price moves down. It makes a lower high, lower low, lower low, lower high, and candles move the same way. Like the candles are going to print respecting the previous candle's highs. So that's what I mean by respecting the high. I mean, it's a very simple concept.
Rakeel,
Hey.
I don't know, quick question. you know when the candle's coming to an end, like a 30-minute candle, like for example in this situation right now with GJ, I get a bit hesitant when the candle comes near to a close. So for example, if you got 3 minutes left on a candle close, I get hesitant to take a trade. Do you get what I mean? What would you think about that?
Well, I don't know. I mean,
Because I feel like
are you hesitant in taking the trade right now or after it breaks the low?
no, for example, if it was to break the low now and we've only got like 2 minutes left for the candle to close, right? That's when I get a bit hesitant because
Okay.
I feel like it should have broke it earlier,
Okay.
if you know what I mean.
Well, then take a small position, and see what happens. Yeah, just take a small one and see what happens because that's something to do with confidence. So when you take a small position and see what happens, if it works and if it's going to happen again, and you're going to take a smaller position the second time, but if it happens the third time, then you're going to say, hey, wait a minute, I took the same thing twice, so maybe this is the point where I'm going to use my regular risk to take the
Yeah.
trade.
Yeah.
Yeah, so it's going to happen. Someone saying in the gulag, the guy who is speaking, you will be successful. So Denise, he's talking about you.
Thanks, man.
Yeah, he's talking about you there in the gulag.
Hey, Roger.
Hey,
Can you hear me?
yes.
I have a question for you.
Yeah, for sure.
I'm using TradingView Pro. I'm paying for it, and it has nice other time intervals, time candles. What have you ever given any thought about that? Because when I use like 25-minute charts or 45-minute charts, I believe that I find really nice entries.
Yeah, that's good. I've never thought about that. I never used it.
Yeah, then I suggest it. Give it a try.
Yeah. Yeah, like if something works for you, just stick to that. That's where profitability is. Just stick with that and you're going to do well with it. Yeah, I mean, that's all I can say. I've only focused on the 30-minute, 15-minute, 1 hour, and that works well for me, and that's just perfect.
Yeah, I hear you.
All right, we still got about 40 seconds left over here. 30-minute candle. Really, really in a delicate situation right now. Looking at the 1 hour time frame, 1 hour candle still forming. Looking at the 4 hour candle, 4 hour still open. The time you wake up, the charts you look at, the way you identify is almost your own algo. Yes. Man, I can't sleep past 5:30 now. I'm up at 5:30, 5:30, 5:45. Gold is continuing up over here to 1952 as well. Yeah, I think we're going to tap 1952. GJ has broken down. Now here's the problem. This candle closed with no wick at the bottom. So if you're taking regular risk at this point, I would say go with like a half the risk. If normally you risk 2%, I would say go with 1% because the candle closed with no wick. And when the candle closes with no wick, this means there's no range for the next candle to go down, which also means there is a 50-50 probability that the candle is going to continue down or is it going to come down, make a wick and go back up. So which is why I would recommend using a half the normal risk which you usually use. Because if you look on the 1 hour time frame, 1 hour candle also, it closed with no wick. So even though we have volume, right, the things that are in our favor are this rejection from this support turn resistance, volume at this time, and the bias for price to continue moving down. And the only thing which is against us is that this candle closed with no wick at the bottom. So due to that, I would be looking to maybe using half the normal risk for price to continue down over here. What a crappy way to finish the 1 hour candle. It's like watching a program for 1 hour and it started so well, but a crappy ending. Yeah, I know, right? I mean, if this candle had a wick to the bottom, it would have been absolutely picture perfect opportunity to take a sell. Hey Raja, I would appreciate your advice on this. This is a question I've had for a while. Oh, let's take a look at this. Had a question for a while. Yeah, so let's take a look at this idea over here. So the stops are around like 12 pips, 13 pips, and you're looking at around for price to come down towards 139.550. But at the same time, you're anticipating the 15-minute candles to continue going bearish. Because if they continue going bearish, then that decreases the probability of price to going back up. You know, so that should work. Let's take a look at this question here in the meanwhile. This is, does this bearish engulfing make the area to the left irrelevant? It makes it irrelevant, but it doesn't make it like you need to completely ignore it. You're still keeping this in the back of your mind. You know, even though we had clean traffic here to the left hand side, but before we had this clean move, we had this consolidation over here. So whenever price comes up, it sees the clean candles, but also at the same time, it sees beyond the candle and see that, okay, price consolidated here. So maybe there's a tiny probability price is going to start consolidating here as well, or start like, you know, rejecting that area as well. GU should fill the 1 hour wick or not? Let's take a look here. GU should fill the 1 hour wick or not? See, if we look at GU, the reason why it shouldn't fill the 1 hour wick is because the 30-minute candle closed bearish. So you cannot take a buy over here for price to continue up because the previous candle closed bearish. So it's going to be difficult at that point. And if you look at GJ, even though someone's entered with half their normal risk, I think it's still a pretty good idea here for price to continue down. Hey, Raj. I came in using Hugo's way, and I don't like that I have to buy Bitcoin to deposit and withdraw. What's a regulated broker I can look into? Nothing. Nothing. Like, the way the industry is moving, a lot of brokers are moving offshore, you know, and they're applying this infrastructure to, like, you know, deposit and withdraw by crypto. There are very few brokerages who do accept, you know, like credit card deposit and bank wires, but not all of them, you know. So that's a problem. So I guess that's the only way now. Like, buy Bitcoin, buy crypto, and then deposit. GJ made a fake out. Based on the info you provide, there is 70-80% chance for price to break to the opposite side. Yes, that's correct. You know, and that fake out was on the 15-minute time frame right over here. And we can see now price is slowly moving down. I think it's going to be around 600, 139, 600, 618, where it's going to be like 10, 12 pips. And then with this pre-New York volume, we should continue moving down towards, you know, 139, 550. Let's see here. So we got CAD news, and that's about it. We got ISM manufacturing PMI later on at 10 a.m. and after that we have nothing really happening. On Wednesday we have ADP. This is going to be really interesting because they're expecting 75,000 and the previous number was 300,000. That's a big change. That's a huge change. I think they know the numbers are going to be low. That's why they're forecasting low numbers as well, so the markets don't have a huge impact. You know, that's basically what I can sense over here. Because if they're anticipating lower numbers, that's what they're predicting over here as well. Because if their prediction was around, let's say, 200,000 or 150,000, and the numbers came below 100,000, that would have a huge impact on the markets, you know, because of the deviation of the numbers. But here, I don't think it's going to have, but we'll see what happens, you know, it's NFP. Why on some brokers, when you close partial, the entry price change? I don't know. It shouldn't change. So maybe you want to ask them that. What's going on? What leverage is Dominion Markets going to offer? 500 to 1. Let's wait for the first 15-minute candle to close and then take sell. See, the thing about this idea is that they are people. I mean, what we what I advised was to, if someone's taking a sell over here, maybe use a 50% risk at this time. Not the whole risk, 50% risk, because the previous candle closed with no wick at the bottom. So that creates a bit of a problem for this candle to continue down, because the previous candle has no wick for this candle to fill. So that's why it's going to get a little tricky. So whenever things get a little tricky, it's better to use 50% of the risk. Like if you're using 2% risk, use 1% risk. If you're used to using 1% risk, use 0.5% risk. Because even though the setup is there, but the way the candles are forming, it's basically reducing the probability of it to continue moving. So, and please don't go full margin on this. It's gonna, the first week of the year over here.
That was yesterday.
Oh yeah, the second day of the second trading day. Let's do that. Why did I deposit 370 through Bitcoin? I was only approved 336. I felt like I was robbed and they did not give me a refund. That's the fee. That's the fee. I think it's it's some 5% or 10% fee when you deposit via Bitcoin. So that's what it is. But then when there's a fee, then you can come on the live streams and then basically you can make that fee back, right? But it is what it is, man. That's how the broker industry is moving now. Because here's the thing. We have so many shady brokerages out there. They don't pay people. And when they don't pay people, when they put limits on withdrawals or when they put limits on how you can do certain things, then there's a problem. And when there's a problem, people complain. When more people complain, then the regulations come in. Regulations say, hey, you can't give a lot of leverage now. Regulations say, hey, you need to put some sort of restrictions on the trades you can take. And then you have these fees now. So that's what's happening now, because there are a lot of shady brokerages there. They don't do the right thing, and it's just destroying the entire business. Business and the whole industry too. So right now, I think we're moving down very nicely. We're coming down to fill this wick here to the left-hand side, 139.652. And if this pre-New York volume continues, man, we can get our 10, 12 pips around, 139.600. Put a runner and then continue on towards 139, 550, 520. Would be a nice one.
Hey, Raja, I got two questions for you. First, being from a risk management standpoint, at what point would you have closed 50%? Because the 15-minute stop loss would be the same as the 30-minute here. So would it just be maybe when the 5-minute high was broken? And
No.
You got a little uncomfortable?
No. If the 15-minute closed bullish. Because the stop would be right over here. Is that right?
Correct.
Correct, right? So if the 15-minute closes bullish, then be closing 50%.
Are you saying closing bullish or breaks its own high and starts to go bullish?
Closing bullish.
Okay.
Yeah, breaks its own high, then you have a confidence issue at that point, right? So at the same time, you need to let the candle breathe, because your stop is up over here, and you're not expecting the candle to come all the way up over here. So if it closes bullish below this range or this resistance there, then you can say, okay, you know what, I'm going to close 50% at that point, because it's closing bullish. If it's closing bullish, then there's a probability it can go up.
Gotcha. My second question was, when you take partials, I know sometimes I've watched a lot of your live streams or your webinars. It used to be 80%. I've seen 90% as well, sometimes 70.
Mm-hmm.
Is it setup specific? So if it's something that you think has a good chance and has legs on it, you'll leave a little bit more on the table, or are you always cutting the same percentage now?
It's the same percentage. It's the same,
Gotcha.
same percentage. Sometimes, you can sense price can move. you know, and then you can leave like more running. You can leave like 70% of the position run, 60% of the run, but it depends from situation to situation, right? For example here, if the trade runs down to like, let's say 139 600, right? That's like around 11 12 pips minus spread, around 10 pips. At this point I'd be maybe closing 90% because there's not enough room for price to continue falling, right? But if this was deeper right down over here and we had this whole clean range, then I would maybe let 40% run or 30% run. So it depends on those factors too.
Right, that's a pretty tight range too.
All right, let's take a look at this chart over here. This candle closed bullish above minor resistance. Take a buy when the 15-minute candle closed bullish. Hit stop loss for 8 pips. Ooh. This candle closed bullish and above resistance. Take buy when 15-minute candle closed bullish. Let's take a look over here. Oh, right over here. Okay. If the 15-minute candle closed bullish, then you should have closed the trade when this candle closed bearish, right? Or if you entered on this candle, then there was a problem over there if you entered on this candle because there was resistance right over here, so there was no buys at that point. All right, let's take a look over here. This is stop loss above previous candle. Candle closed bearish below resistance. Close 50% in small drawdown. Question is why? Close full position break even. Question is why? You know, why? I mean, that's the question. Why? Why? I mean, 15 minutes still bearish. I mean, here's the thing. Moving too slow, I mean, you can't succeed with that mindset. If price is moving too slow, you can't succeed with that mindset. Price is not going to move fast every time. You know, sometimes your trade is going to last like 15 minutes, 20 minutes. Sometimes your trade is going to last 40 minutes. What are you going to do? You're going to close the trade after every 10 minutes because it's moving too slow? No, man. Like once you're entering a trade with half the risk, if you're entering a trade with half the risk, it doesn't make any sense to close 50% because it's moving too slow. I mean, man, you guys got to get rid of those ideas. It's moving too slow. I mean, it's not moving too slow. The candle is closing at its appointed time. You know, if you're taking the trade on a 30-minute time frame, the candle is going to take 30 minutes to move. You know, whether it moves in the first 10 minutes or whether it moves in the last 5 minutes, it's gonna take 30 minutes. You can't fast forward time. You know, so you have to let the candle to close. We can see the 15-minute candle is now closing soon, and if it closing bearish, now you can manage risk. Because if this candle closes bearish and the next one breaks this high, then you can manage risk. You know, so if it doesn't break the high, then obviously you're still in the trade. But you can't lose confidence because price is moving too slow. That's like saying, oh man, this 1 hour is taking a long time. No, it's not. The 1 hour is going to take the exact time it took the last 1 hour to form. So you just gotta
60 minutes.
Yeah, 60 minutes, right? So now we got the 15-minute candle to close. If someone's in sells at this area right over here, now you're only looking to see that this new 15-minute candle, it shouldn't break above this high. If it breaks above this high, then you can kind of like manage your risk and manage the trade at that point. You know, so guys, have some confidence in yourself. Because, I mean, if you're planning for your trade, waiting for the trade, and executing it, if you're patient enough to wait for the setup, you should be patient enough to let the setup play out. You wouldn't bring your stop loss. What's this? You wouldn't bring your stop loss to the top of the 15-minute once it closes bearish? Yeah. I mean, probably not. Gonna keep my stop at the same place where it was and manage the trade if it breaks the high over here on the 15-minute time frame. But, like, you know, it should continue down towards 139,600. The only problem it will have now is this wick right over here, which is where now your risk management comes into play. Because if you look on the 15-minute time frame, even though we're coming up to this rejection area, we want price to cross this area here, you know. But if it starts rejecting, we can manage risk once it comes up to the high over here, which is going to be at our entry at this point. You know, but with momentum, pre-New York momentum, moving into New York open slowly, we should see price continuing down towards 139,600 and then to 139,550. What's the black dot in the center of the candle? Oh, that's the magic candles the institutions give me. The institution sent me magic candles, which I can see on the cheat sheet. This means it's nothing here, it's gone. If I send my profits in form of cryptocurrency from a Philippine broker to a crypto wallet, bank on the Seychelles, and pay from there with a credit card, am I not avoiding income tax? I'm not sure about that, about income tax sending from Philippines. I have no idea about that, I'm sorry. All right, perfect. This is coming down nice. Got about 4 pips left, 3 pips left for it to come down towards 139,600. Beautiful. Gold is still continuing to move up over here, respecting. See now, gold is doing this perfectly. It's respecting the previous candle's lows, right? And this is a perfect uptrend right over here. It's respecting the lows, it's breaking the highs, making higher highs, and moving up. Awesome. You know, right over here on GJ, the same thing we want it to happen. We want candles to respect the highs and continue making lower lows and lower highs for price to continue down. Could we have an entry on the break of the 15-minute? Probably not. Probably not, because now your range is too small. You know, you got like a 9 pip range, 10 pip range. There's no entry at that point. Entry was right over here when this candle closed and when we started talking about different risk strategies you can use at that point. That was the entry. And now you're anticipating it to continue down. Oh, for gold. Yeah, you have to say what you're doing. Yeah, you could do that. Let's see over here. I mean, if we do break above this resistance and price is moving up, we still got some room here left. I think could be a very good idea here on the 15-minute. But man, I think we're gonna see 139,600 and then 139,550 on GJ. Just gotta keep this going now. I hate the stupid idea of spreads. Well, it is what it is. We can't escape spreads. All right, scalpers like lower spreads, so go with commission-based accounts. Yes.
Yeah, ECN baby.
ECN. Please put a watermark of pair and name and time frame on screen. Thanks. I think you can see it right over here, right? We got pound, it says British pound, yen, 30-minute. So I think that's good enough.
Even if you had the watermark, you would probably have the same question from the same guy.
Yeah. Does this mean it's a 30-minute time frame?
Yeah, thing happened to me the last stream.
Oh, yeah.
Yeah.
How is Canada reacting to shutdown? Man, people are just agitated, man. Like, no one likes it. Here's the thing. We got the population in 2 sections, right? One section says, oh, lockdowns are good. We got to contain all this and that. And there's the other group that says, oh, this is just straight garbage. You know, like, just keep the gyms open. I mean, the only thing I want is to let the gyms open. That's it. I mean, because, man, we go to the gym to stay healthy, our mental health, you know, I mean, it's...
Yep.
I mean, at this point, it is what it is, right? I mean, we've been exposed to this lockdown for so long now. Mentally, we've just accepted it. It's like normal.
The UK is another animal.
Yeah.
It's they're like by tier 9 by now.
All right, we're coming slowly down. Coming down towards 139,600. Ooh, someone got 10 pips already. Beautiful. Beautiful. Let's see how this candle closes. Letting people see how you trade live is very challenging. Not too many can do it. Congrats. I started live streaming as well like 1 month ago. Now I'm more disciplined. Oh, nice. Very nice. Yeah, I think since we've live streamed, my discipline has been really good because, you know, I mean, apart from the pressure, well, there used to be pressure, now there's not. When people are watching you, it's like you just gotta wait for the perfect scenarios to show up, and that's it. And then you start talking about that. Just like when this candle closed bearish, we started talking about, okay, why it can move down. If it can move down, what sort of a risk you should use based on how the previous candle closed and all those concepts, which was really important. And now when we look on the 15-minute time frame, we can see how this candle is closing. If it closes with a small body, I think that's going to be an opportunity to maybe reduce risk at that point, because this candle closing with a small body could mean that we're probably rejecting these wicks here to the left hand side. So you'll have to be very careful with that. So this candle will decide what you're going to do with your risk now. If it closes with a small body, you're going to manage your risk. If it closes bullish, you're going to manage your risk. But if it closes with a stronger body, then obviously we can say that, okay, next candle can continue moving down. And that's going to be the 30-minute candle continue moving. We are entering tier 5, even though people are dying with the C word. Oh, not of C word. Oh, yeah, that's the thing. The cases in Ontario are still rising every day. Every day we're getting record numbers, even though the entire province is in lockdown. Every morning you wake up and there's a new record number. Record number is reached, and we're like,
They have a hotline in New York. You text the C word to the number, and they give you like an update right away.
oh shit.
Yeah, it's dope.
They should have a chart on that too. We should just
They
start
should.
buying it. Just start an index chart for like CV,
Like people in
CV20,
the
CV19.
ICU.
Hey, Roger.
Hey,
Man, I was in quarantine for 2 weeks. I thought I had it.
Oh, that's
Yeah,
why you
yeah,
were
yeah.
gone.
I was gone, but I survived, man. I didn't have it. I don't have it.
The optometrist.
I was seeing it, but it was just my asthma kicking off. But I stayed at home, just chilled, just did my workout at home, kept at home. But it was scary. I thought I had it at one point, you know.
Oh, I have asthma as well.
Yeah, that's the thing.
It
Man.
sucks. Oh, we got 3,000 viewers right now. 3,100. Nice.
let's look at UJ. UJ is still ranging. Gold is still stuck over here. Ooh, see that 5-minute candle closed with no wick on the top. Even though it broke a little bit the highs, but it closed with no wick on the top. Created a little bit of a problem. So the people that wear the mask and stuff, you know, okay. Let's take a look here. See this, the 15-minute candle is about to close, and look at this. It's kind of like rejecting this area there. This is where you start to think that, okay, your bias was bearish, and if this candle is closing with a rejection, maybe the probability of it continuing down is decreasing a little bit, right? We still got about 4 minutes left over here. Let's answer this question. Why would it not be a good trade to take if it's only 9 pip range? Isn't any gained pips good pips, whether 20 or 9, especially with bias on your side? Because if it's a 9 pip range, it's not necessary that price is going to go all the way to the range. You know, like, I mean, if we have this, let's say from here, we have this, let's say 17 pip range, you know, it's not necessary that price will go all the way down towards 17. It can come down towards, you know, like 11 pips and start rejecting. So if your TP was at 17 pips and price came down here and started rejected, then you're like, oh man, like, you know, why does this always happen? So that's why you need to have, for me, a really good perfect range is going to be between, I'd say, like borderline 15 to 30 pips or 25 pips. That's going to be a great range for me to play in, because if I have that range, then I know that I can take a trade and basically have some profits from that range. But if it's a too small range, then it doesn't make sense, because if you have a 9 pip range, your spread is like what, 1.8 pips. Now your range is cut down to what, like 7 pips. And I mean, what are you going to get from it? 5 pips? No, man. My anxiety is not worth 5 pips.
Nah, it's too much.
I want a bigger range.
That's what I said. I was like, that range is way too small.
Yeah, because you got to account for the spread, and then you got the 1 pip commissions. So, I mean, a 9 pip range cuts down to like a 6 pip range when you deduct all the fees you're going to pay when you take a trade.
The other thing is too, when people measure ranges, you're never going to get an exact entry or an exact exit. So I think a lot of people have to realize that you have to take that into consideration as well. So the bigger your range, the more room for error that you do have, right? So a 9 pip range, you figure take off, you know, maybe 1 pip for spread, so now you're at 8. You didn't get the exact entry, so now you're at 7 or 6, and then you try and close. You know, you might end up getting only 4 or like you said, Raja, 4 or 5 pips. So it might not, it's not as healthy to do that because of all the variables that are involved. So the idea is to find a wider range to give yourself more room for error, right? So if you look at a 40 pip range as an example, and you take 10 pips out of that, you have basically, you know, 75% of that range to play with. You know, if you're taking 10 pips out of a 40 pip range, you have a wider margin for error, which increases your overall win rate too, because you don't need a perfect entry, you don't need a perfect exit. You could come in, you know, into the middle of the range as trend is moving in your direction. You have a lot more room to play with at that point.
Rakeel, you muted, bro.
We cannot hear you, Raja.
Oh, why not? I'm right here.
Hey, Raja, is Ontario full
Now.
lockdown right now?
What?
Is Ontario full lockdown right now?
Ontario? Yeah.
Yeah. They just they're gonna announce it here tomorrow. Everything's gonna be closed. Construction. I mean, everything except the grocery store.
Yes.
Crazy.
Bananas.
So we got about 50 seconds left over here. Candles are about to close over here. This 15, now see how these candles, they're respecting. So this was the first one that moved down. This was the entry candle right over here. And as this candle coming down to a close, now you're expecting the next candle to respect this high and to continue moving bearish. But if the next candle breaks this high, then probably at that time you're managing your risk, probably like, you know, taking some risk off, because, you know, you're expecting candles to respect the highs and continue down. But if it doesn't, then obviously, you know, then that basically reduces the probability of price moving bearish.
Well, Mr. Raja, I got my tips at half risk. Now to go to online AP psychology. Have a great day.
Oh, beautiful, man. Well done.
Goodbye, brother. AP psychology. Wow.
Hey, it's been a while with no trades. Just curious to know, why would we try and trade the GJ now when there's a much more possibly safer trade to sell below 139,500? Yes, that's a really good question. I mean, there's a very, very good idea to take a sell below 139,500, but the only reason why this trade was taken was because at the time there was this range over here. This is like a 20 pip range right over here, which is why this trade was executed. And then as candles were forming, we came into this rejection area, and then we started to manage risk, you know, because we wanted price to continue moving down and bearish, and like, you know, that was about it. But the main idea was there was this range, 20 pip range. So that's why this trade was basically taken. So this candle's still open. If you look on the 15-minute time frame, didn't necessarily broke the high over here, but this is still open. There's still probability for it to continue down. We're moving in pre-New York, higher volume at this point. Slowly we're going to move towards New York Open, even more stronger volume at that point. So yeah, we should see price coming down towards 139,600 and then 550.
Good morning, everyone.
Hey,
David.
How's it going today?
Great,
Breezy.
wonderful.
Great demo day.
All right, let's take a look at this chart over here. This is GJ. This is the way I drew support and resistance here. I saw this was resistance based on a London session. I see that you drew resistance based on rejection, not the fresh zones. Yes, they're subjective. They are subjective. So, which is why I have it drawn right over here instead of right over here, because this is the most recent one at this point. That's why I have it drawn right over here, because this is the most recent one. So if I think price is going to move up, I want price to break above 139,800 for price to continue moving up. Looks like GU is moving much more cleaner than GJ over here, trying to continue down here as well. Hey guys, hope you're all well. Does anyone have any experience with the 5%ers, good or bad? Oh, I don't know. 5%ers. I think that's a
It's a
funding
gym
company.
brand. Oh,
Yes, it is.
Exactly, yeah.
Mac, I think your mic is really
no,
close to
that's
your
not
mouth.
me. I think
Oh,
it's
that's not
David.
you? Oh.
No, I'm not Darth Vader. No,
It's Mac Vader.
Mac Vader.
Can you still hear it?
No,
So right now on pound yen, you can see how the 15-minute broke the high over there. So that's where you were basically managing a risk at that point, and then once it broke the previous high, then obviously now you're out of the trader break even. So shouldn't be taking a loss here at all. So this is where managing risk is really, really, really important, because we expected this candle to respect this high and continue down, but it broke the high. So you basically, you managed risk at that point. And once price came up to break this high, now you got out of the trade at break even though you wanted price to go down. So I think this was a really, really good exercise on how to manage risk in a position which you think is going to go in profits. So perfect. We all learned about risk management here today in this setup. Yeah, clapping. All right, let's take a look at this chart over here. Hey Raja, is the London session coming back? Probably not, because I'm sleeping at that point. Price break, previous support, this and that. Took an entry based on a 30-minute because it looked like a really good break and retest. Closed 50% over here. And perfect. Awesome. You managed risk over there. Amazing. But if you go in a drawdown, that's not amazing at all. So now what we can see is we're basically creating this minor support, and now this range becomes smaller. Now, since this range has become smaller, now you start looking at much better ranges, probably for a break above, 139, oh no, actually, break above 140, 100 to continue moving up because we got clean traffic, like clean range, or we break for this area, 139, 500 to break down. This is where you can turn around and say, okay, you know what? Price is ranging. There's no volume. We don't know where price is going to go. So it becomes extremely difficult at that point. Please give me a gold signal. Cross heart killer.
hey, come on, stop spamming, bro. Jesus,
Cross heart killer.
you're making my job harder, man.
Gold is going to shoot an arrow through your heart. It's going to kill it. If you ask for signals on gold. Alright, Let's take a look at your JPY. Your JPY is still ranging. We got support down at 126, 120, resistance at 126, 320. Clean range going up over here, and yeah, I mean this might be a ranging New York session, but we'll see what happens. Let's take a look on the 4 hour. 4 hour still making a low over here. Yeah, a very difficult price action. Ooh, we got Chris Monty over here. Welcome.
Yeah, Chris. Some people are asking, when are you streaming again? Well, that says it. He's got no mic.
Yeah, he doesn't want to talk to you, man.
Oh, me? Damn.
Oh.
Personal.
Most likely that.
Well, where did you come from? Where did you come from?
I like the fact that Kerwin just show up to roast Mac.
Yeah.
He's always doing that. Breaking my balls.
Kerwin's always silent until one moment, one specific moment. He shows up.
That.
It's like a surprise box, he comes out.
Trust.
Well, gold hit 1950. That was the target we had set up from yesterday. And if we had taken that trade, like Ted called, I think I had no drawdown.
See, what's happening with gold is, I might be wrong, but I'm going to try. We're moving bullish, right? Trend is bullish. That's, I mean, a monkey can look at that and say, oh yeah, trend is bullish, right? But now we look at a 30-minute time frame. We're creating this. All right, let me just remove this first zone right over here. Let me just fix it up over there. Okay. So in the 30-minute, we're creating this minor resistance right over here, right? Sort of like a rejection, probably like a rejection here for price to maybe form like a support on a small time frame and maybe grab liquidity to move up by New York Open. Yeah, I'd say if we break above 1950, like let's say 40, there's a very high probability we're going to continue moving up towards 1953. But we really have to see how New York Open is going to make price move, because as Ted mentioned, in the past few sessions, we've seen price grab liquidity for New York Open and then continue moving. So that's
most of the times gold is going to give you chances to continue riding that train. Basically, you want to see some sort of pullbacks with New York session, New York opening from 8 a.m. Sometimes before 8 a.m. you get those heavy pullbacks. But the structure right now is basically just sitting around there. 1950 is a strong level. To be honest, 1950, it's a psychological level. It's really strong. So there's only two things that are going to happen at 1950. Either way, we reject that level and start, correcting the price from the starting this week, or we break really heavy that price. So next target for gold, I will say 1962s, somewhere there. But if you get a break from 1950, it's going to be a heavy move. So for that heavy move, you need basically, let me see if I can do some adaptations here.
I have 1962, which will be the correction of that vaccine news from November the 9th.
Yeah. Well, basically, you wanna see something like this, and start rejecting that price, and maybe, slowly creating this small trend. But this is something that you have to be aware of gold, that this pullback toward this area, it's there. Yeah, it's gonna be really hard for gold not to give you a pullback prior to your session in the next 20 minutes, or from 8 a.m. to 8:30, and then before the 4-hour candle close, you're gonna get this heavy move. If we reject that price, this area right here, if we start respecting that area and start consolidating, then it's a move that's gonna happen later on today.
Maybe during the NYSC, right?
Yeah, but right now, this area is basically the area I wanna see gold playing.
Yeah, I mean, just to add to that, Kerwin, I think you have to be very careful trading gold at this point. Where we're at it with current market structure. You go to the weekly time frame. we're entering the weekly zone. So what you may find is at any given point, so you can sort of see it's already starting to give us a little bit of information. This is essentially a very scary area, because when you think about zones, and we talk about this a lot, on the smaller time frames, what usually happens when we hit a zone, right? The smaller time frame, when you hit a zone, you usually hit it and then it'll reject, right? So this is an instance where we can come up anywhere from here over to here, and top off over here, top off over here. So you have that opportunity. The issue arises because it's a weekly zone. At any given time on the smaller time frames, we could have a massive quick rejection, right? And this is the point where people blow their accounts, where there's a lot of problems if you're not managing risk, because here's where your perfect trades were. This area here, because you can see that price basically moved through that area, right? So if we draw a line through this, and if I was able to just quickly just clear out, say, all this noise, right? So if we take away all this information right here, and you just focus in on what we see currently, let me do this a bit. So if we were to look at that right now, and you were to say to yourself, okay, how would I have known that this candle here, right, this is the current weekly candle, would match up with, say, this candle here or this candle over here? You could see there's been multiple instances where we have traffic, and what I mean, it's very, very clean right through that volume. So there's a clean path. As we get up into our next area, which is over here, you can start to see that there's rejections, or there's wicks. So that, and obviously this giant one over here. So the scary part for me is, as we come into this zone, we're now looking at this wick here and in the corner, and then we have to fight through that to get up into this top area, which is clean traffic again. So I'm not saying that there's going to be, it could drive all the way up past 1955 into 1963, but I'm just saying, it's at any given time, if we lose momentum, it's going to reject hard back into where the safe spot is. And you can see where the safe spot is. It's below 1950 in where there's massive volume with actual candle bodies, not candle wicks. If you want to see how this works, all you have to do is go on to a smaller time frame and then look at it and say, okay, what happens when we enter a massive zone? We either reject very hard, or with momentum, we push through it. Now, when we have momentum to push through it, we just continue to move through that direction, through that zone, but it gets very choppy. Now, when you magnify that into a weekly time frame, the choppy, or the chop in terms of price moving up and down is a lot wider, because the time frame you're working on is a higher time frame, which will then create a lot more problems compared to like a 15-minute or 30-minute time frame, where for the most part those time frames are smaller, so the rejection area or the ability to drive through that zone is a little bit easier. Think about it almost like if you were to push through I guess sand, right? So as you go to the beach, the sand is very soft. As you get closer to the water, when you try and push your foot through the sand, it becomes a little bit harder to do, right? That's sort of what's happening right here, is as we get closer to the higher time frame zones, it gets harder to push through. Now, as it pushes through, you're going to find, if we have that momentum, it's going to just drive right through. But you have to be aware that if you get a rejection, it's the reason why you're getting that rejection is because you're entering a zone, but also at the same time, it doesn't necessarily mean that trend is changing, right? So if we are looking for a trend change with this zone, what you're essentially saying to yourself is, if we draw this zone again, just for a review, you need now a candle to pop up over here and then drive right back into this area over here. Similar to what happened to here, similar to what happened here, what happened over here. Okay, you can't say, well, because this candle's rejecting right now, this one here, that now all of a sudden we're gonna just drop. I would wait for another candle. So you might find that this weekly candle pulls back a bit, and then the next weekly candle drives down, or if the candle does pull back, and we have a wick to the downside, you're driving now into the following week. And this, to me, would be a safer opportunity because you have this bottom rejection here to drive us right through and then ending up into this area over here, similar to what we see on our smaller time frames. Because once again, all you have to remember is your higher time frames work like your smaller time frames. It just takes longer for it to complete at that point. So that's sort of where I'm looking.
Yeah. I think next week is going to be an amazing week for gold because we're going to have the confirmation from this week. This weekly candle.
Gula got excited for gold moving, one candle moving down. They're like, oh, gold's dropping.
Oh, wow. Yeah. It makes sense to drop toward 1945, 1946, 1944, I'm sorry. And if we reject that area, then it's gonna continue moving to the upside to retest those highs with before the 4-hour candle close.
I see that 1944 area. Makes sense.
Yeah. I mean, sometimes gold it's easy to trade. The only thing is that you need a bigger stop loss compared to GJ or any other pair. Because 10, 20 pips gold can take you out in less than 5 minutes when there's volume.
Yes. So what's this? Impulse entry. Impulse sell when the next candle breaks the low. Possible rejection.
There you are. Okay. What's it?
Yeah, it looks like it for price to break this low. But then again, the range is small. You know, it's not enough range. It's pretty small range. So even if you're taking it, it's going to be pretty tough because you know the range is pretty small. It's like 14, 15 range, pip range. So it's going to be a little difficult. Oh wow, nice one, Kerwin.
Yeah, it's something that gold tends to do every day. You just need to pay attention what happened at certain times.
Yeah, plus also I think there was this support. Once we broke it, there was this, the next one was at 1945, 44. See, what I've also noticed is if gold is breaking down in a range, it's not completely, but like 80% of the time it's gonna go to the opposite side.
Yes. Yeah.
Yeah, the way it is right here. Nice. Look at that. How do session times play into trades when trading off higher time frames like daily or 4-hour? So your session times are probably going to become your volume times, right? So if you look at this 4-hour time frame, let's take a look at this 4-hour candle on gold. So if you look at this 4-hour candle, we can see that this 4-hour candle has 1 hour left for it to close, and we're moving into the New York open session right now. So this is where we're going to say, okay, like, you know what, now the next hour is going to dictate where the 4-hour candle is going to close, whether it's going to close bearish or whether it's going to close bullish, because now there's going to be a lot of volume in this time. I think what I'm going to do is we're going to try to do a simulation session, probably not this week, but the week after, and it's going to be only on the 4-hour and the daily, and how to incorporate, you know, candles as we move towards different sessions. It's going to be something different, you know. It's going to be trading based off the higher time frame. But at this time on, especially GJ, what we can see on the 4-hour is like we're basically creating a low over here, but also at the same time, if we want to kind of like, okay, let's just remove all these zones here and let's take a look on the 4-hour, right? So on the 4-hour, we basically had a support. We had the support, candle broke down, this candle came up, kind of like retesting the support. Now, if we break below this support at 139, let's say 570, then we know there's a very high probability for price to continue down to at least, let's take a look over here, 139 even, right? It's like a 50 pip range over here. 139 even if we break below this low, because now we can see, okay, if we rejected, came down, created support, we broke the support, sort of like doing a retest. So now we need those confirmations on the smaller time frame, right? On small time frames, if we can break below this area 139,500, then we know there's a very high probability for price to continue down. But at the same time, if we're looking for buying opportunities, we know for buying opportunities, a good buy opportunity, we need price to close above 140, 100 so that we can have clean range going all the way up towards, let's say, 140, 460, 450. You know, it's like 30, 35 pip range over there. So your JPY is still ranging. So it's a pretty slow day here today. I mean, we had this like small move on GJ coming down. Gold also now had this small move come down. Now it's retracing. So, you know, it's always good to just stay very patient, very calm. Staying calm is really important, you know, because guys are going to take trades. They're going to take a buy or sell. They're going to lose the trade, and then they're going to lose their tits over it. You know, like
and they're gonna blame it on you.
Yeah, I mean, like after one loss, just something goes off in people's minds. Yesterday, someone messaged me saying, "Hey, man, I took the trade in the morning. I won the trade, and then London close came around, and there was volume, and I traded, and I lost 40% that day." Yesterday.
That sounds like me, but I wasn't. The only trade that I took, it was I couldn't sleep, so I waited until London opened, so I took that trade. Actually, Kerwin, he influenced me into taking it.
The trade from London.
Yeah, he said, you know, as long as it stays below 140, hit it down to 139, 500.
Yeah, 140, 100 on GG was a nice.
Yeah, it was a nice move. I'm gonna send you the chart. You can see it.
Yeah, that was a nice trade.
Let's see here. Hi, the screen is blurry. No, it's perfect.
Check your interest rate.
Yeah. All right, let's take a look at this chart over here. Coming in by Zuhu. Let's see if Zuhu is going to win a free copy of Magic Keys.
Ooh.
All right. Yeah, we got some Magic Keys giveaways.
Knock on wood.
Knock on wood. Oh. I'm not going to say what the criteria is going to be. We're just going to say that if you like a chart, it's good, or someone did was really amazing, you're going to get yourself a Magic Keys. So we have around 20 Magic Keys to give away. Okay, so let me just say this, right? We have around 20 Magic Keys to give away. Some of them are going to be given away in this New York session. Some of them are going to be given away in one of the London sessions hosted by Monty. If people don't know Monty, this is Monty right over here. You go to YouTube, and then you go to, it's basically Trade with Monty. Trade with Monty.
You can spot Monty because he's the oldest Forex trader.
Yeah, exactly.
In the whole industry.
He's been trading for 90 years.
And the third one is going to go. Forex. And the third one is going to go to, I don't know, whatever Mac's channel name is.
Mac Attack.
Mac Attack. Yeah, Mac Attack.
Hey, why do you go for Frenchies, bro?
Mac Attack. It's Mac Attack. Yeah, right. Bro, change this picture.
Yeah, man.
I don't have any pictures, man.
Change this. Put like a candlestick or something with muscles on
put
it.
a chart or something, man.
Yeah.
Why you all rusting on me, bro? It's 7 in the morning, man.
Come on, it looks like a bodybuilding channel or something, man.
Yeah, Mac Attack.
Bro, I have no other pictures. What do you want me to do? I can make a picture.
Man, I can make a picture in 5 seconds. Here.
Yeah.
Ted, all right, Ted, make me a picture. Go.
Watch.
Paul and Mag, they are fighting for that.
And we need one for the Frenchies, bro.
if someone saw this and read the Asian persuasion, someone think, oh, this is probably an Asian dude who's a bodybuilder.
Like an OnlyFans page.
Yeah.
OnlyFans channel also.
Yeah.
I should make an OnlyFans just for charts and analysis. Yeah, no, I'm gonna change that, and yeah, I'll be doing 5 magic keys, so 1 per day for 5 days.
Terrible.
Perfect. All right, let's take a look over here. This is resistance, half position taken out at the start of the new hour over here. Okay, break even, set tighter close, or right here. Rejection happened. Could have taken 50% profits at break even point. Would have been a small profit, but better than expected. Yeah, it was good. You should have closed the whole thing at break even. I'm not sure where you closed it, but rejection happened except to stop out at break even. Stopped out at break even. Okay, that's still pretty good. That's pretty good. You would have taken some profits down over here. But these are things that you learn over time. So if we look at this price action, as price came down and started rejecting, I think some people took profits or partial profits at this point because they saw rejections. So based on how many times you see these rejections, you start to get more diligent in knowing that, oh, okay, you know what? I've seen this happen before and these are rejections happening. So maybe it may reject. So I want to secure profits at this point. Like the first 4 or 5 times, you may not notice it. But once you start reviewing your trades, you start to see that, okay, if I held the sell over here, price stopped me at break even, maybe I could have taken some profits at this level because there was rejections here before. Just maybe. So like playing out scenarios over and over again, it's going to get you much better the next time those scenarios happen again. So it's going to be better that way. Let's take a look over here.
Only charts.
Yeah. Downtrend, price broke resistance, made a new low, bearish candle closed at resistance, closed 80% at 10 pips and stops at break even. Oh, nice. Beautiful. Very nice. Oh, and for the giveaways, if someone asks, did they win? Automatically disqualified. So there's going to be no desperate behavior accepted. If you think someone's getting desperate, disqualified. Boom. Alright, let's take a look over here. Entered at price, broke the high, previous small lot over here. Okay, small risk. Okay. Secured, 10 pips secured. Profit ran over here, went into drawdown straight away, but I was confident it's going to go up. And you waited for the candle to close, stop loss a little bit wider. Okay, still pretty good. Like your stop was 18 pips, but you secured positions. See, this is where, okay, so now this is a really, really good example right over here, right? So sometimes when you're trading, your stop is going to be bigger than where you're going to take profit on, right? Let's say your stop is going to be 15 pips and your take profit is also at 15 pips. But when price comes up towards 10 pips, you secure positions at that point. When you're securing positions at that point, that doesn't mean that you have a negative risk reward. That means that you're identifying an area where price may reject. So it logically makes sense to take profits at that point, because when you take profits at 10 pips and then you put stops at break even. Hold on, I forgot.
Oh my god.
Rebooting.
Bloopers of 2021.
Bloopers.
Yo,
Raja has a blue screen of death in his head.
Bloopers.
Yeah, man, come on.
Let my brain reboot. Rebooting. So when you put stops at break even, now essentially now you have a positive risk reward, right? Because you've secured 10 pips and now you're in profits and you put your stops at break even, now your risk reward is positive, being from negative to positive. So that was pretty good. I think this chart made us really explain this whole process of negative risk reward and positive risk reward. So I think Mr. Wix FX can get the first copy of the magic keys.
Very nice.
Yes.
Nice.
Yes,
It's
very
nice. I like.
Yeah,
Great
I like it.
success.
So, congratulations.
Great clap.
Yeah, but if you already have a copy, then you can possibly donate it back to the pool, you know, but that's all up to your discretion.
Yeah, I think people have to remember a stop loss isn't necessarily to, you know, you're never looking to take a trade and have your stop loss hit. A stop loss is to protect your account capital from random market fluctuations. Like if there was a random news spike or a random flash crash, that's really what a stop loss is meant to be. Like you shouldn't be going onto the chart saying, well, you know, I'm placing my stop loss here, I hope it doesn't get hit, right? Like your trade, you should already be in a frame of mind that your trade is going to win. We shouldn't be going in there with a thought process that I'm going to hit my stop loss. You know, like once again, the stop loss is built to protect your account from random issues in the market, random things that happen in the market. For the most part, you should avoid hitting your stop loss at any time, really, when it comes to trading. I mean, if the trade isn't going in your direction, you should try and cut it as soon as, like Raja said, as soon as you realize, like, you know, it's not going your way. You'll find that when you journal your trades, after you've journaled about maybe 1,000 or 2,000 trades, you'll realize very quickly that trades that you've won were very easy. They never really went into drawdown. They never were challenging. You weren't panicking. Things were just moving in your direction. Those are the trades that you're going to start taking over and over again. It's similar to what we were saying, you know, with the gold trade, right? So everyone's looking at gold saying gold's bullish. I've seen this 10,000 times where gold has hit a weekly level or a daily level and just played around there and rejected. And it was very difficult because I've been in trades where I've sat there and, you know, not sweated, but just been like, this is stupid. I'm in a trade at a weekly level or a daily level, and all it's doing is playing around. And I have to wait for like a random hour candle or a random 30-minute candle to go back a bit so that I can, you know, either take a small profit or close with a small loss. And, you know, it's not a good feeling, right? So then you start to realize and you start to adapt and you say to yourself, well, why am I taking a trade here when there's so much range? If we break above this level or we break below this level, all I have to do is wait. And then when you start to see those ideas, you'll realize, like, people ask me, they're like, well, how do you place gold? Like, how do you get such a good entry, or how do you have such a tight stop loss? It's because when gold trends in an open environment, like where there's clean moves, like yesterday, there was clean moves from like 1933, basically all the way up to 1950 to today. That's a clean move all through the weekly, so you don't really have any problems. I mean, there's going to be pullbacks, but we're in trend and we're heading towards a target, which was 1950. Once that target's achieved, you sort of have to take a break from the charts and say, okay, where can I go again for that kind of move? And with gold, you're going to see there's, over this year, there's going to be multiple 50, 100 pip, 200 pip moves. So you don't have to worry about the fact that you missed the first big move of the year. Like, there's going to be multiple times. The idea is just don't get trapped playing in these daily and weekly ranges. Try and plan your trades out so that they go to those zones and you're in the trade before it hits that zone, not trying to trade within that zone, hoping that we break above or now we reject and we start going down again. So it's just something to keep in mind as a trader, that, you know, your stop losses are there, obviously, but you're not looking to hit them. So, you know, it's more of an account management piece for your stop loss than it is, oh, every time I have a trade, I need my stop loss in because it's just going to, you know, I need to protect my trade. It's like your trade should always be heading in the right direction, to be honest.
Yes, sir.
Yeah, you're right. And like a bigger example is like when gold was pushing up above 1950, you know, with this one candle just pushing through the zone. Like, you know, sometimes we can say that, okay, like, you know, it's pushing really heavy, let's take a buy over here. But if you really know the characteristics of gold and how it moves, it's really important to wait for a candle to actually close beyond this level, because, you know, like, things like these happen all the time in gold. Like, price moves up, guys get excited, take buys, oh, we think it's going to go up, but, you know, it just kind of like rejects it most of the times and comes back down. So at that point, even if you had your stop loss below the 15-minute candle, it's 100% gonna get hit at that point if it rejects. That's my first trade of the day, explained in Germany and English. Now I'm out for the day. Thanks, just watching. Hope you have a great day. Oh, nice. Let's take a look over here. Coming straight from the gulag. Oh. Broke out of zone, broke out of support. Took trade after 15-minute candle. Okay, it sells over here. Closed at break even. Perfect. It's beautiful.
You speak German?
Bro, it's English right over here.
Oh.
Sich liest 70% Willers dies Litz. Sie
Gebrochen hat.
Gebrochen hat.
I know that says
Yeah,
consolidation right there. That's consolidation.
Consolidation.
That was French, by the way.
Yeah. My trading is changing like crazy thanks to them following from Kenya. Oh, nice, man. Thank you. Like this was the whole motive of these live streams is so that people can come on the live streams. And sometimes, like when price is ranging, we're prone to look at some other pair because, like guys say, hey, if this pair is ranging, I'm just going to look at something else that's not ranging. So the idea is to just stick to just your pair, because if it's ranging, it's going to break out. And most times, I remember when we first started, what would happen was that if I'd be trading, let's say USD CAD or USD JPY, and if price would be ranging, I'd start looking at something else like gold, or something else like GU, pound dollar. And while I'll be looking at pound dollar, I'd see like price really moved away from gold or USD JPY, and it really broke out of consolidation. And I was always missing those moves. And the best way for me not to miss those moves logically was to just focus on them, like don't deviate to something else because one thing is ranging. Let's take a look at this chart here by David M. Gold zone rejected. Okay, your entry is over here, crossing for a sell, and looks like price is doing sort of a retest to continue down to retest the low. Makes sense. That's what we're looking at here earlier too. For the 1 hour right over here to like reject and continue down, but it didn't. So we're stuck in this range. Hello Rakeel Bhai, please take a look on this chart. Alright. Sent by Hunan Pasha in the Gulag. Let's see here. Oh, we got some rainbow clouds over here. US 30 went to an all-time high. Great opportunity for a sell. Okay, very nice. You took that sell. Entry on the bearish candle stops at 40 pips. TP 200 down over here. 80% closed here. Oh, beautiful. Very nice. Yeah, right now it's just getting a little difficult here because volume is slowing down here a little bit. This is a buying opportunity here. Ultimate TP at 140 flat, first TP at wick fill. Would this break off the previous candle would be a good entry? See, I was looking at that, but then I was like kind of like hesitant towards it because of this minor resistance right over here, and then you got another resistance right over here. So that's why I was a little hesitant. I was mostly looking for a very clean and easy buying opportunity above 140, 100, which is like 20 pips away, right? 20 to 25 pips away. Yeah, 25, 27 pips away. Above 140, 100, you have clean candles here and really easy opportunity for buys. For this to fill the wick, I don't think there was enough range. It's like 12, 11 pip range, not enough range. So I think one thing that if people really want to change one thing moving in 2021 is to really be stubborn about trading in good ranges. Be stubborn about that. Like a lot of people, they're not stubborn about the best situations to happen. You need to be really stubborn about it, right? If you think that this is all ranging area, which it is, and then there's another ranging area between 139,900 and 140,100, which it is, I think a really good trading area is going to be above 140,100 because you got these clean candles here to the left hand side. So be really stubborn about that. Or if we can kind of like, even if we break the support now, we have a smaller range here like 12, 13, 14 pip range over here. So be really stubborn about now for price to break below 139,500 for it to continue moving bearish. You know, so look for like really solid trading ranges to trade in. Let's take a look over here. If current 30-minute candle closes above the 30-minute resistance, we have a clean candle coming down. Do you think price is going to replicate the same move? We'll see. Still, you know, not enough range because, you know, like candles, they basically rejected this area before, so it's going to get tricky. Banks probably won't like this trade, but I will give it a chance. Oh, let's see here. Oh, Raja Banks probably won't like this trade. Candle closing above and not creating that wick as the candle on the left. Leave us some buys. I know it's messy, but it's Asian. Oh, so did you take this trade, or are you waiting to take that trade? I think if candle can break and close above, then you can risk it. But still, I'm going to say it's going to be pretty risky to trade in the range, even though we got this clean candle here, but we got these rejections here before, so it's going to get a little tricky at that point. Thank you for the education. Account grew since the few months I've been trading. Oh, nice. Beautiful. That's where we all want to be here. Took a buy position at the low after taking a loss. This is a paper trade, so I thought might anticipate reversal for candle to wick at the new resistance. Saw it was in range. I probably taken sell a lot, so I figured. Oh, I'm not sure where you took the buy, or I guess you took the buy right over here on the 1 hour time frame. If that was the case, then I'd say it was risky, but you made it work because now we are looking for it to retest and continue down. There's no volume at NY Open. No volume. Pre-NY also there was no volume. NY Open, if there's no volume at NY Open, we need to see what time there's going to be volume again. It's going to be New York Stock Exchange. Would you take a look at my chart, please? Thanks, mate. If it is good, would be super happy to win Magic Keys. See, you're disqualified just by that comment, but we're still going to look at your chart. All right. Oh, okay. Sells below 139,480. Makes sense. Makes sense. For price to continue down, and same idea for buys. For price to continue up above 140,100. And the rest area you've labeled as a range. Pretty good. Oh, someone donated $10. Thank you. Thank you. And £2. Beautiful. All right. I'm going to use that money and go get some coffee, and I'll be right back.
The markets are dead.
Yeah, it's crazy. Yesterday, it's a little bit of volume, but today there's nothing.
Yeah, it's interesting.
Markets are watching us.
Yeah.
Yeah, there's absolutely nothing today.
I don't know. It's because all the countries are like calling lockdowns, and now I don't know. People doesn't know what to do. I don't know.
Tomorrow, January 6th, there's supposed to be a huge protest in Washington,
Oh
a
gosh.
pro-Trump rally,
Yeah.
and they're setting up military and stuff in preparation for it.
Oh boy.
Well, tomorrow at the Senate, they're supposed to be accepting the votes,
Yeah.
and
Certification.
yep, and there's a whole bunch of Republicans that are going to not accept them, and I'm expecting violence tomorrow throughout the country, so a lot of uncertainty. We're living some crazy times.
Oh
It's
yeah.
insane. It's insane.
What state you in, if you don't mind me asking?
I'm in Utah. I'm in Salt Lake City, Utah.
Nice. I'm in South Florida myself.
Yeah. I mean, we haven't here in Utah hasn't been too bad, but we're not too far away from California, and California is just completely destroyed.
Well, Florida strip club owners are getting arrested because they're not obeying curfew. So that tells you what we're doing.
Well, how could you obey a curfew in a strip club? It's impossible. Well, there was like 900 arrests over New Year's Eve in California. 900 people got arrested for partying. But I don't know. I mean, Ted, what are your thoughts? I remember from trading through all these years, I always start trading like mid-January to end of January, because beginning of January is usually not that much volume. Is that your experience as well?
Yeah, I mean, I learned that. I mean, yet last year was an anomaly, to be honest, where like gold rallied very hard. There was a lot of movement in the markets because we had a lot of international tensions, right? So you had like the conflicts going on in Iran. You had all that stuff with Trump going on. It's not normal to see that kind of volume. So last year everyone was like, oh, you know, this is why you trade all through the holidays, and this year we learned that, you know, that's the reason why you don't, because there is no volume. It ranges, it gets choppy. The other thing is too, spreads are wide also, because there's a lack of volume or a lack of interest in the markets. And really let the institutions set everything up for you so that they drive the direction and you just sort of follow along. And out of the last 5 years, I think 2 or 3 years out of the last 5 years, there's been like a flash crash on one of the currencies, whether it was the yen, I think CHF, there was a flash crash as well. So it's easier just to sort of avoid those problems and things like that. So you know, you just sort of let the market set up. And I mean, especially if you've been working all year too. I mean, you know, most of us trade almost every day, and you know, you basically put in 250 days, 200 days of work, if not more. So like, why not take some time for yourself, especially when there is no volume or it is a little bit lower or choppy at that point.
Right. Yeah, I usually don't trade all of December and start like around the 20th of January, somewhere around that area, depending on volume. Yeah.
Yeah, and it's like I'll come back now, like, and this is what I normally do, is like the first week back, I'll just watch the markets to sort of get sort of an indication of what's been happening, take a look at charts, mark them up, and sort of identify some items. But other than that, it's just fun to just watch for a bit and just see what's going on.
Yeah, no, I agree.
All right. If I'm planning to risk 3,000, how much? What lot size should I use? Well, it's not necessarily lot size for trading. I think we have a misconception with lot size. What you have to do is you have to calculate your risk first. How much do you want to risk per trade? And then figure out your range, figure out how many pips is that range, and then you determine your lot size, right? So if I'm trading with a $3,000 account and I want to risk 1%, I know 1% of 3,000 is $30. I could do one lot trade with, you know, essentially 3 pips, or I can do a 0.1 lot trade with 30 pips, or I can do a 0.01 lot with 300 pips. So you have to determine what your appetite is for the trade that you're doing. A lot of people are so regimented when it comes to the actual lot size. It's not your lot size, it's your risk associated with your account. That's how you want to manage your trade at that point. If you want to take trades that are with wider stop losses, you have to lower your lot size. If you want tighter stop losses, you can increase your lot size. It's just, once again, you have to stay within your risk parameters that you use at that point.
Okay, let's take a look at this. Hey Roger, can you share your opinion about this, please? You can call me Roger, Raja, Raj, Roja. Man, I got a lot of names now. Before we do that, I want to see if gold is really going to break above 1950 and continue on towards 52.
I was just asking the question. Yeah. If you break 1950, what do you think? I think it can go to 1959 if we come back in the 30 minutes. If we go back.
Okay, I'm going to mute that. I'm not sure if the conversation is for us or... Alright, let's take a look at this chart. Oh, wrong chart. Gulag sent the wrong chart. You could have won the magic keys, but you sent the wrong chart. Alright. See here. Does anyone have a problem with taking a snapshot on TV? Maybe you can use your phone to take a picture of the TV. That's going to work better. If you're having troubles in taking snapshots of the TV. I'm not sure what you're trying to do, but... Alright, let's take a look at this chart here by Ant. Let's take a look here. This chart is sent in the YouTube chat, and this is the pound yen 30-minute chart. Buys above 139,900. Okay, looks good. See now, buys above 139,900 are good, but also they're not as good as above 140,100. So you're probably missing a zone right over here. Right above 140,100, really good safe buys. Risky buys above 139,900, and the risky is because of the reason is that there's a rejection right over here, and then you have these clean candles. But before we get to clean candles, there was this support made on this consolidation here as well. So that's why this will be a little bit risky for price to continue going up. Looks like Luke is sending his chart again after I responded like 3 times to his chart. I'm not sure if he can read the chat or not, but we're going to open his chart over here. So this is a trade taken by Luke over here. You took the trade once we broke the low over here. You secured 85%, and then price came up and stopped you at a break even. It's pretty good, pretty good. And after that, we can see price is just ranging at this point. Price just ranging, so that was a pretty good trade. Alright, let's see here. Would you check my trade from the London session? I think we'll do that the one time here. So these were sells executed when 15-minute candle closed below. Secured everything at 11 pips because we were approaching 4-hour support. Nice. Yeah, that support was really strong. We also identified that yesterday as well when we sent the analysis.
All right, guys. Thank you. Have a good day. I'm gonna go buy some toilet paper.
All right, before they run out again.
Yeah.
Right, man.
All right, take care, guys.
See ya.
It's a commonality I've noticed in the streamer community. When someone donates, you're supposed to say their name and then thank them. No, probably not. You know, like I'm not a YouTube streamer, you know. I'm just sharing what we do normally. And if someone donates, perfect, you know, if people donate, they donate out of respect, right? They're not donating for their name to be shown on the, like, I mean, let's just stop being a Karen here, man. Let's just relax and continue on with this. Yeah, I mean, there's no volume here. Literally no volume. 30-minute candles are coming down. We're approaching this minor support over here. 4-hour candle is about to close, so we'll see what happens. I think based on the 4-hour, what I would really want to happen would be for price to break this support at 139,500 and then continue moving bearish for New York Stock Exchange open, or like, you know, for London close. That's going to be ideal, because not only will be continuing this trend from overnight, but also we broke below the support and we're retesting this and then breaking this strong support. Because once the strong support breaks, man, GJ is gone. It's done. Pound yen. And then when you think about the lockdowns happening, oh boy, then you can become a fundamental trader. Then you're like, oh, I took shorts, we broke the lows, and the UK was going in lockdown. Boom. I capitalized on it. These moves happened a lot last March. You know, a lot last March. Let's take a look at this one chart over here. Waiting to break this for a big drop. Euro JPY, yeah. I think we're all at this big support. GJ is at that big support. Euro yen is at that big support there as well. Camille Jeet donated €2, and they said, "Can you give me your thoughts on the chart?" All right, let's take a look over here. Gold 30-minute breakout candle, retest candle. So entered a long position. Oh, this was risky, but you took the long position. Secured 20 pips, test that stop loss to break even, runner at 60 pips. Very nice. I would say this was risky, but you made it work. You made it work. But to be honest, if you look back to how gold has reacted to New York Opens, you'll see that many times it does these retests. So maybe if that was your idea to take the buy and it worked out, awesome, man. It worked out very, very well here for you. Now we're coming back in this situation on pound yen to see if we're going to break below, and then we're going to continue down towards 139,500 or not. Alright, let's take a look at this USD JPY analysis here. What's going on over here? This is the 4-hour chart. Price last touched March 2020. Nice 60 pip range with lockdowns coming in. And yen is a safe haven. We can anticipate sells below 102,700. Yeah, looks good. Break below right over here for price to continue down. It makes sense. Makes sense, because then that's a really strong support, and I think all currencies are at these strong support right now, so we'll have to wait and see what happens. Alright, let's take a look at this chart. Although this 40 pip range, there are multiple zones on the lower time frame, so it's a no trade range. Yeah, same thing over here. 4-hour candles just ranging right now and just waiting to see what happens here. You're going to be disappointed when GJ shoots up. Just watch. See, instead of making a comment like that, it's going to be much better. Hey Raja, I think you are wrong. Take a look at this chart and look how it makes sense for GJ to go up. That would have been a well-educated response rather than saying, "Oh, it's going to go up. Just watch." You know, just send a chart. You know, blow me away. Blow me away with some analysis. Blow us all away with your analysis. Because if it goes up and you sent an analysis, man, everyone's going to come back to the stream and they will message you, "Hey, bro, how did you know it's going to go up? How did you mark that chart? How did you have those levels?" But, yeah, man, if it goes up, we'll watch. I mean, it can go up, no problem. But, like, having analysis backed up by analysis is going to make much sense that way. All right, let's take a look at AUD USD analysis here. AUD USD. Enter on break of 30-minute candle. Take profit of 80% at 10 pips. Let the rest run towards 0. Right over here. Okay, makes sense. Final long-term target securing. Yeah, makes sense. Once it break the lows over here to continue down. But I think your thing is upside down over here. Shouldn't the green part be down and red part be up? Yeah, but still, we get the idea though. Looking for price to continue down. In the short term, I expect pound yen to range or fall a little bit because of lockdowns. Yes, I'm anticipating it to fall beyond 139,500. At least 40-50 pips. See what happens.
Hey, Roger.
I think so too.
I think there's no business going on here. Everything's closed. Gyms are closed. Banks are closed. Shops are closed. I mean, it's only got one way to go. It's just a matter of time.
Yeah.
The whole thing's anybody looking to buy is practicing witchcraft.
Yeah, I think for this second lockdowns, the markets are well prepared for that. Because I remember in March, April, man, things were just moving. You had 30 pip, 15-minute candles on GJ, 50 pip candles on the 30-minute time frame. It was just madness. You were taking trades and you were closing 40 pips, 50 pips out of nowhere. So I think this time they're well prepared. The markets are prepared because of the volume it's going to bring in because of all these lockdowns. And I do think we should continue bearish below 139,500 too.
Yeah, I mean, once GU start breaking 139, 475, somewhere there, I mean, there's clean traffic to the left. If you look at the hourly candles, man, that GG is screaming sells.
Yeah.
Your next target easily, you can manage this trade going toward 139 flat, at least. Basically, there's nothing else holding GG sells from there.
Yeah.
Once we clear 139, 475.
Yes. Once we clear that, we're coming down.
It's done, so yes.
Yeah.
Curving 139?
Yes, 139, 450. Once you start breaking that low, I mean, it's done, so it's gone.
It's a daily support, so.
Yeah, looking at the hourly candles. So.
Yeah, I get it.
Yeah, you have that nice structure on 1 hour candles. So next 4 hour candle will do the job.
From 50 to
from 139 to 500, yes.
We don't have anything.
Yeah, it's like 50 pips below that area.
Yeah.
You don't have to, you don't have to risk it right now. You're gonna have clear traffic to the left. One will start breaking 139, 475.
I'm sending you a chart for the first time. Could you please take a look at it? All right, first time sender, long time watcher. Let's take a look. London session made a low. Also a support over here. Looking for sells. But yeah, makes sense. Perfect. Really, really easy analysis here. Just waiting for it to kind of like break below and then continue down. How are we looking for entries here? That's what I'm thinking. Because if we keep breaking below 139,500, the entries is going to be a problem over here. It's going to be a big problem. Because obviously, if this candle starts moving down, I mean, entering, thinking that this candle is just going to start moving, that's a really risky idea. But I would want a candle to kind of like close near 139, 500, 520, 530, and then have the next candle start breaking the low to give you some sort of confidence with impulse entries that, okay, now we should start to continue down. So we'll see what happens here. With the 5-minute, I don't know, it's just, I don't know.
No, 5 minutes at this point, when there's no volume in the market, it's risky.
Yeah, it's risky.
That's the thing you can do is going to 15 minutes and 30 minutes. Yeah.
Let's take a look at this. GJ 13 pips sells below 139,500. So it shouldn't break the upside, then 80% chance it to break the downside. Yeah, that's what we're thinking. An overwhelming majority has the same ideas for pound yen. So we'll see what happens here. All right. Let's take a look at this chart over here. This is sent by Liviu Leonard from the Gulag. Oh, wrong chart once again. Second time in a row, man. Oh, man. Second time. Your name is going in a notepad over here. Hold on.
It's going in the ignore list.
It's going in a notepad. Now, I got some names in a notepad. I'll show you guys. Livid Leonard.
So that's a real thing.
That's a real thing, man. I don't joke around. Look, there's a paper over here and it has a bunch of names on it.
Oh man, oh man.
Yeah.
I don't want to be in that list.
Because my memory is bad, right? My memory is bad, so I'm keeping tabs on people now. Okay. Yeah, alright. Let's take a look at this chart over here.
14 pips. That's too much.
GJ 15 chart. Previous 15-minute candle closed bearish off of resistance. Enter when candle breaks the previous 15-minute low. Nice. Very nice. Beautiful. I'm kind of jealous over here. But very, very nice trade over here. Yeah, so basically you took advantage of the volume and the momentum in the New York session for price to continue down. And you created a bigger range for yourself too. It's like a 19-20 pip range. Very, very nice. Yeah, that's a very, very nice trade. All right, let's take a look over here. Was this smart to close the trade at a point? All right, let's take a look at this GJ chart from someone sent in the Gulag over here. Idea was at least to fill these wicks over here to downside, okay? Closed at this point with small 9 pip profit since price started to jump up and down. Beautiful. Yeah, no, this is pretty good. This is a very, very smart idea to close 9 pips. I think at the same time, if you would have closed, let's say, 10%, if you would have closed, let's say, like the 90% of your position, then you would have had like a runner running in the anticipation for it to continue down. But still pretty good. You saw price moving up and down. I think that's where you get a little bit more smart, you know, like as price starts to come down, you look to the left hand side, you see there are wicks to the left hand side. So if there are wicks to the left hand side, that's an opportunity because that's where price started to reject earlier on, you know. So as price comes into the same vicinity, just like right over here, you say that, okay, you know what, there's a probability it might reject it, so I may want to secure some positions or not. Why do you have your support based off the 30-minute when the hourly support is just under 530? Oh yeah, this is okay, let me just put it down over here. It doesn't really make a difference. There you go. It makes no difference at all. It's just at the same like the idea is that there's a support over there, right? And we're looking to see if price is going to break below these candles or not. Gold is still ranging over here. Euro yen is still ranging over here. They're waiting for a breakout. They're waiting for someone to say something or to something to happen. Hey Raja, let's make a bet. If you laugh while reading this, I win 1 magic keys. If you don't laugh, then I have to do 50 push-ups. What if I do a poker face? What's this? Ooh. Entered on the 15-minute close after the previous 2 candles making okay right over here. My question is, it didn't work out because of low volume most likely. See, here's the thing. Close 50% after close like a bearish doji and then close remaining at 2 pip lost after start breaking up. Awesome. You know, the volume was there. The idea was correct. right? Candle was closing bearish and you wanted this candle to continue moving down. Perfect idea. But sometimes, the candles are not going to print the way we want them to print, because of low volume most likely. So I would say there was less volume because look, you closed 50% after it closed like a bearish doji. So you're like, okay, you know what? It closed like a doji candle. Doesn't make sense to hold the trade. So let's close partials. You close partials. And when the next candle broke the high, you closed the entire position. So that was perfect. So manage your risk really well at that point. But sometimes, there's no volume and it is what it is, just like here today, we've been here since 6:30 in the morning and it's 8:40 right now, 2 hours and nothing, so sometimes you come to the charts and you get no trades because there's no volume at that time. And when there's no volume at that time, you're like, okay, you know what, maybe there's no sales here today and maybe tomorrow we're going to have a better day. And also, if you look at the Chinese indicator, if you guys remember, who's been here since the morning time, we indicated that, okay, so at that time, Chinese indicator, we were all ranging. So Chinese indicator said everything is going to range, and everything is ranging. But now you see this pound is getting weaker now. So maybe we're getting some sort of a confluence that, okay, if we break below 139.500, can we continue moving down or not? And also the lockdowns are happening too. So China knows all this, man. China's watching the UK news and they're like, oh, they're going in lockdown. Start going down. Raja, check out this trade. Been viewing your streams for a while. I aim to learn something new every day. All right. You make no money. We sell the pound. All right, let's take a look at this chart over here. This is 10 pip stop loss. Oh, 10 pip stop loss. Once third candle open bearish, you waited for the engulfing candle to close. Perfect. Third candle open bearish, you waited for the engulfing candle to enter. Very nice. That was a very good trade. All right, so we're coming down to a close of the 15-minute candle at this point. 15-minute candle is coming down to a close. This is going to be a very interesting move over here. Are we going to break below 139.530 and continue moving down or not? That's the question. Let's take a look at this chart here. For our future move, if it flips, there's clean traffic to the left-hand side. Yes, I agree with that. I think you could also look for your entries a little bit earlier as it starts to break on the smaller time frames here as well. Someone's got $1 million question, but there's no question after that. So, is this a scalping group? No, this is where you learn to see. I don't even know what you learn over here. I have no idea what you learn over here, but this is like commentary on live market. Sometimes when there's a trade presented, we call out the trade. If I'm going to take a trade, I bring out the profit and loss thing. I point it out for everybody when I'm taking the trade. So this is what it is. So gold is back again now. Gold is back
Holy.
at the same level.
But that's expected last 30 minutes. This 4-hour candle should close above that area. 1952s.
See now, if this 15-minute candle closes like this, and the next one breaks the high, we're going up.
Yeah, and well.
Because look, the previous ones just came up and boom down, boom down, boom down.
Yeah. Because you're expecting the next 15-minute candle to do the job.
Yeah, yes.
So GJ sell, gold buys.
You got 10 seconds left over here. 5 seconds. 3, 2, 1. Boom. Oh.
Let's go gold.
Well, on the bright side, it closed bullish.
Yeah.
Let's take a look on the 1 hour. 1 hour still bullish. 1 hour has respected the low, but it has broken the high. Right? It's respected the low, broken the high. just need candles to break above, let's say 51 to continue bullish. Trading is a very, very delicate. I mean, sometimes you're faced with delicate situations where it's breaking, it's not quite breaking it, the volume is still there, and then it just doesn't work at all. All right, let's take a look at this chart over here. Sells would be good if it breaks the low of the previous 4-hour candle. Yes, I agree with that. I agree with that. You know what else I would want to see? If this 4-hour candle closes like this, right? If this 4-hour candle closes like this, what I want to see is visually, I would want to see a bearish candle form like this, break the previous low, and just continue moving down. Yeah. This is what I would love to see happen on the 4-hour. And this is a money setup right here.
Yes.
You know? Like you have a big bearish candle close over here, and then you get a small body bullish candle, and the next one just breaks the low and just dumps.
Yes.
Yeah, it's going to be amazing. Hey bro, are you ready for fly of Bitcoin? Roham. No. Man, I don't care where crypto goes. You know how many times people come to my DMs and say, hey man, you should go buy this crypto, buy that crypto. I'm like, listen, I just focus on what makes me money, and that's it. That's it. I don't focus on why something else is moving up. I don't focus on how someone else is making money. What are they trading? How are they trading? I don't care about that. I focus on how I can basically, like, you know, perfect my own skills, my own strategies, and kind of like compound that into making bigger returns. Can you take a look at my chart here? Let's take a look here by Jiawen Chen. Mr. Chen sent a chart over here. Let's take a look at this here. Waited for the 1-hour candle to close bullish, bearish. Closed 75% of my positions. Oh, nice, beautiful. Beautiful, you closed 75%. Still have something running over there. What would you think about this? I'm trying to catch that move with the pending order because I'm not going to be able to be here at the charts. All right, let's take a look here. So you're trying to catch this sell with a pending order. See, if you're trying to put a pending order on pound yen, I think a really good option is going to be probably to have a pending order below or exactly at 139.500, and once that gets activated, maybe look to see on the 1-hour time frames or on the 30-minute time frames to adjust your stop loss. Because if the low gets broken at 139.500, then you want to have a stop above the previous 30-minute or the 1-hour candle, because then you don't want a 1-hour candle to break the previous one's high, because if it does, then it's not going to move down, right? So that's something you'll have to keep in mind once your pending order gets activated, to see if you can have a conservative stop above the 1-hour or the 30-minute time frame. How long did it take you guys to learn charts and price action? I'd say like maybe I'm still learning a lot. You know, haven't really learned the whole thing, still learning a lot. You know, every day we're learning, but like to get good at that was to just focus on just one session, one pair, and that's it. You know, so for me, I focus on pre-New York, New York Open, sometime London close. I focus on pound yen, and that's it. Because the more you focus on, you know, a pair at a time, the more confident you get with those things, and then you get better at that slowly. If you look at GJ 3-hour chart yesterday at 5 a.m., it looks like the current 4-hour candles on GJ. I've never looked at the 3-hour chart. Oh, do you know what it looks like? Oh, nice. Yeah, I try not to look at those things. I try to just look at what I'm comfortable with, and then I go from there. All right, let's take a look at this. This is a Google Drive. Oh, what's happening over here? Retracement expected. Super Super unrealistic target, 139, 160. Hey man, that can still happen. So you have a sell over there. Price is coming down. Nice, nice. 180 pip profit over there. Beautiful. Same move every day. Executed. Yesterday trade was BE due to sneaky market movement. Very nice. So it's got around like, probably gonna leave in like 10 minutes, 15 minutes. Hey, Ecstasy, Raja, my first time sending a chart. Can you please take a look at the trade I took during a London session? All right. Let's take a look over here. Price was in bearish move. I took an entry on 15-minute time frame, secured 80% at this point with stops at BE. Nice. I think a lot of people took the sell. A lot of people took the same sells in the London sessions. It's pretty good. Look, CHFJPY. I'm giving a buy signal. Yeah, probably give a chart as well so we can look at that. First trade of the week, please look at this. Let's take a look at this by Rahul Yadav. Man, we got a lot of people posting charts here today. Candle broke below. Entry when this candle. Oh, same trade. Are people copying each other? Same trade in the London sessions. Thank you, fam. I'm off to slave for 10 hours to make what I did in 15 minutes on GJ yesterday. Ooh. Thank you, thank you. Good luck, good luck. See, this is the thing, right? Fahim made the amount of money in 15 minutes yesterday what he makes by working 10 hours. You know, so I think we can take that as really good inspiration because, you know, your processes are all going to remain the same. You know, maybe after 1 month or maybe after 2-3 months, you might say, hey, you know what? I made what I make in 3 days working 10 hours. I made that in 15 minutes because your process remained the same, but your lot sizes just started to increase, you know, and then a point comes when you're like, oh, you know what I make in a week, I made in 15 minutes because your process remained the same. And once you start getting more gains, then you start to think about that, okay, why am I even going to work? You know, like maybe I should ask them for part-time hours and then see what they say. You know, because you're making what you make at your work, and let's say what you make in 2 weeks, you're making in a day. Then you start thinking about, okay, let's just go to part-time hours. You know, and then people say, hey, whoa, what do you mean you can't have part-time hours? Then you're like, yeah, I can. I want part-time hours. And maybe you can introduce part-time hours at the work, and then everyone's going to hate you. Oh man, this guy introduced part-time hours. If you were trading, would you have taken...
Gold is flying.
Oh, gold is flying?
Gold.
Oh, there you go.
No, it moved like 10 pips, but whatever.
Shit,
At least it breaks the resistance that we were talking about.
I got too excited, my bad.
Man interrupted me so fast. Gold is flying! Gold is flying!
Oh, sorry.
No, that's fine. Yeah.
And then
Well-
they hit the panic button on gold.
To be fair, it did reach 1952, you know.
Yeah.
Gold is flying. Yeah, that was going. Yeah. I was moved like 10 pips.
No, but now it makes sense to continue pushing. I hope this 5-minute candle closes above the 1950s.
Oh, if I was trading, if I would have taken that sell on GJ, yes, I would have taken this sell right here on GJ. When we were discussing it, right over here, I would have taken that sell and then would have secured some positions, and my runner would have gotten stopped out.
GA is also one of those creatures that's gonna give you a really hard time with
Yeah.
those retests. But if you look at it this way, this 15-minute candle basically is just doing the retest to the previous 15-minute candle resistance. So once this 15-minute candle start turning bearish, go for it, because we are approaching to the 4-hour candle closing. So next one is gonna do the massive drop.
Yeah.
Unless this 15-minute candle close above 139.700, then it's crash out from this trade. Other than that, there's still chances to continue going down.
If you usually only trade NY session, would you simply miss the trade if GJ breaks 139.500? Yes. Yep. I usually, in the past, we have anticipated moves, and those moves that didn't happen during the time I was trading, and I've simply missed those moves if they happen outside the day I've traded. I've simply missed them. And that's what trading is all about. You know, sometimes you get the moves during the time you trade, and sometimes you don't get the moves during the time you trade. Are you going to chase them because you're missing them? Are you going to get mad at yourself you're missing them? I'm not going to get mad at myself because I know I can catch moves during the time I trade, and I can make more money off of them. And if I'm missing a trade when I'm not looking at the charts, then I'm not looking at the charts. It is what it is. You know, you got to be okay with that.
Yeah.
Let's take a look at this chart by Carmen Browers. Oh, okay, look at this. This is a 30-minute chart. Pound yen, minor resistance formed. Secured 80% at 10 pips, stop loss at break even. Oh, beautiful. Took an impulse entry when the candle broke the low right over here. Oh, very, very nice. Very nicely done. I think what we can take a look at this as well in hindsight now is that maybe a better entry was probably right over here as well when we broke this low over here. Because not only at this point our stop would have been smaller, but then our range, it became bigger as well. You know, so whenever so even when you have a winning trade, right? Even though whenever you have a winning trade, always look to see that, okay, I had a winning trade, it worked out perfectly. How could I have had a better winning trade? You know, or what could I have done to maybe have a better entry, or like, you know, like something I missed at that point. Someone mentioned, how do I buy magic keys? That's a good question, because that information is not on the screen. So you go to magickeys.trade. Yeah, you go over here. magickeys.trade, and then basically there's a forum, we have reviews, features, and everything like that. So yeah, that should work. All right, so we got a question over here. This question is, my analysis is always really good, but then I enter and exit too early. I think I panic a bit. Any advice? I think a lot of people panic when they go in tiny profits or they go in tiny drawdowns. Tiny drawdowns and stuff. But I think the main problem is, like, whenever you're getting scared to close a position or close, like, you know, like close in like a small loss or a small profit, always close like 50% or close like 80% and let the rest run. Because whenever you're in like a little bit of a drawdown and you want to close the whole position because you're scared, instead of closing the whole thing, close like 80% and let the rest run. Because now slowly you want to build confidence in that trade or in that idea. Because the more confidence you can build with smaller positions, slowly a time is going to come where you're going to say, okay, like, you know what, instead of closing 80%, maybe I'm going to close 50% at this point. And then soon you're going to say, okay, instead of closing 50%, maybe I want to close 10% because I'm losing confidence, but I have more confidence. It's going to work out. So, you know, like building confidence that way, it's going to take some time. It's with the same way when, like, let's say price starts to break resistance and you're not confident about it, so you go with like smaller positions, right? You go with smaller positions. If they work the first 4 or 5 times, then a point comes you're going to say, okay, like, you know what, I've been trading the same setup with smaller positions, I've seen it happen and work out for the most part, maybe now I'm going to use like a bigger position at this time, because there's a higher probability for it to work than for it to not work. You know, let's take a look at this chart by Zara over here. Took a sell here as it formed a fake out bullish over here. Okay, took a sell right over here. Okay, exited half the position as the bullish candle formed in my stop loss zone, but I stayed because I saw a fake out finally came back. Okay, exited completely as it hit support, 17 pips win. Oh, beautiful. Oh, very nice. So you held the trade during the drawdown, but you also exited half at that point. This was actually very, very good. Actually very good. Because you took the trade, went in profits. As price came in drawdown, you closed half. You didn't close the whole thing. You left the whole thing open. So you closed half, and then price went into profits. Beautiful. Gold is kicking my ass. I think you're kicking your own ass today. Gold is not doing anything. Gold is just moving the way it moves.
Yeah, I messed up on that.
If you're taking more than 2 trades, that's all on you.
Oh no, that was just one trade.
Oh, then that's fine.
Yeah, I just took the loss now. I should have waited for the 4 hour to close.
Yeah.
That was my mistake.
Gold gave that opportunity in 1952. Gold is flying.
I think gold is just trading in a range.
Yeah, gold is running around with a
earlier. Yeah, we said it earlier.
This is what Ted said. It's a dangerous spot right now. It's going to trade in that range, and you can get in that wrong side, and it can really screw you.
One thing I want to advise everyone is to stay very, very patient. You know, yesterday, a lot of guys had really good day yesterday because, you know, price was moving really nice. But today, price is moving equally as garbage as it was yesterday moving nice.
Yeah, totally.
Yeah, so you got to be really patient.
100% agreed on that one.
Yeah, because listen, Monday was a winning day, Tuesday, ranging day, maybe small loss. Don't compound losses. You got Wednesday. It's the first week of the year anyway. So you got to relax. Alright. Let's take a look at this chart over here. Oh. Range throughout UK Open. Preferred clean candles over here. You're preferring candle to break above this area to continue up or break below the support to continue down. Back up for sells. Wait for low. Yes, looks good. I have the same idea over here. For price to break below the support and then continue down towards 125, you know, 950, 970, those areas there. You know, so which is why, I mean, because of all this, that's why I'm waiting to trade from next week, the 11th of January. Because the first week is a warm-up week. So if you're executing trades, execute low-risk trades. But if you're not executing trades, this is a warm-up week. You know, warm up. You know, when you have a big game, you warm up, right? You're like, hey, let me just warm up a little bit. So you're warming up your mind right now. So if you're getting anxiety about taking trades, just stop. Stop it.
Boss, thank you very much for today.
Thank you for showing up, brother. Appreciate it.
Hopefully 2021 is our year. Everybody, take care. Stay safe.
Take care, Jasser.
Take care, guys.
Have a good one.
Sir. Yeah, you know what I've noticed? And I was talking about this with somebody yesterday, and what I noticed was when we started our streams in 2018, we saw a lot of people get consistent in 2020 when they started watching the streams from August 2019, September 2019. So whoever has been a part of the streams since August, September, November of 2020, 100%, I can guarantee, man, a lot of guys are going to see consistency by like April, May, because you know they were consistent. They were learning consistency by watching the streams in the last half of 2020. Moving in 2021, they're coming in with this strong mindset of discipline. You know, you're coming in with the strong mindset of discipline, especially the guys who are just starting out. Now you're looking at the streams. Maybe it's going to take a little bit of time for you to break out of that habit. But I think by the middle of 2021, you're going to start to understand that, oh, okay, you know what? It's all about just 1 or 2 trades a day. You know, because in the beginning, we don't realize it. But after a couple of months of watching all these us retards on the stream here every day, people start to identify that, oh, okay, you know what? It really is about 1 or 2 trades a day. That's what guys say, you know, oh, these guys, these YouTube streamers. And I just laugh all day. I'm like, oh, yeah, exactly. Bradley Moodley. Bradley Moodley sent a chart. Hey, Raja, is my chart correct? Let's take a look here. So you know, like every day when you wake up, just tell yourself that today you're going to be a disciplined trader. Just tell yourself that. Every day, tell yourself, disciplined trader, disciplined trader. When you take a loss, you're going to analyze that loss. You're not going to take another trade. Just tell yourself every day. When you tell yourself certain things every day, man, you start to believe those things. And when you start to believe those things, man, it just becomes a part of your habit every day. And that's a beautiful thing when you come to that point.
Hey Raja, I feel like you're speaking to me specifically because I took this loss.
Oh no, I'm speaking to everyone.
No, I understand. No, but it's all good. I'm not overtrading. I think I'm just gonna take the loss and that's it.
Yeah. No, because what happens is like subconsciously we make the exact same mistakes. Everyone makes the
it went
same
through my
mistake.
mind. You went through my mind. Yes. It went through my mind, but I'm calm. I'm good. I'm gonna step away.
Yeah, because whatever I say because I used to make the same mistakes, so I can only talk about the mistakes I made. And over the years, since I've been like teaching and mentoring, I've seen that people make the same mistakes. We all go through the same situations, the same circles, and slowly we get to the point, oh yeah, it's all about just 1 or 2 trades. Okay.
It's very, very true.
Buys above 136, 100 because you got clean range over there. Sells below this area right here because you got clean range over here. Yes, that's good. We'll see what happens. I think, yeah, since we haven't had any volume pre-New York Open, I think the next volume is going to be at like New York Stock Exchange Open. See this candle, 4-hour candle closed with a small body. A perfect sell is going to be a break of the low over here. And I'm going to be watching it during the day if that does happen or not. If that happens, man, it's going to be perfect. But if it doesn't, then we're still going to be back in the range over here.
I think tomorrow we may be seeing some crazy moves. So we need to be careful because of the political issues tomorrow.
Oh yeah, we also got NFP this week as well. All right, everybody, I'm gonna head off over here. Take care, everyone.
Take care, man. Stay strong.
Thank you, Raja.
All right. Thanks, Raja. Thanks, guys.
Thank you, everybody.
We'll see you tomorrow.
Yes,
Thank you,
sir.
brother.
Tomorrow, shukriya. Take care,
Thank you,
Gulag.
Thank you, guys.
Shukriya.
Adios. Ciao, bye bye.
Adios, ciao.
See ya. Bye.